Welcome back to Block TV and Cryptonomics at the beginning of a week that has seen the price of Bitcoin hover under 7,000 over the weekend. That's the lowest since May 2019. Now, having lost around 17% of value in the last few days, Bitcoin is now, at the time of taping this, trading in and around 7,100. The cryptocurrency market is in the red. We are in that zone where many prominent crypto experts recommend people to buy the dip, and others rally at the proof, so to speak, that Bitcoin's volatility is not to be trusted. That said, why is this happening? Is the Binance News saga to blame, as some would argue? To break that down, I'm joined by none other, luckily for me, than Asher Evans, Senior Block TV correspondent. Hello.
Yeah,
pleasure to have you. Let's start with how did we get this low?
Okay, so we had the big dip over the weekend that saw us hit down to this 7,000 mark, where we're just hovering just above now. Look, as with all these things, speculation abounds all over what caused it, but again, there's no doubt that there are correlative ties to what's happening in China. So much that goes on inside that country does seem to have at least a correlative impact on what's going on in the marketplace. And we saw that China's central bank rolled out a nationwide crackdown on exchanges and ICOs.
When did they do that over again?
That was end of last week,
right? Yeah.
And the likes of which we haven't seen since September 2017. So a real crackdown, taking a real stance, and making sure that the sort of crypto industry cannot run wild or rampant within China, particularly in their key cities. We're talking Shanghai, we're talking Shenzhen, we're talking Beijing, the main financial and sort of tech hubs of China. And they're saying, look, we're going to crack down here and make sure this doesn't go ahead. We saw the price dip after that. Now, what begot what led to what?
Chicken and the egg.
Yeah, it's a whole series of instances here. There's also, as you alluded to in your intro there, the sort of Binance, the Block Crypto scandal that's going on, which for those who aren't up to date on everything. So the Block Crypto, in a crypto news outlet prominent in the sphere, put out an article stating that Binance had its Shanghai offices raided by police.
An article that came out on Thursday of last week.
Exactly. Now, then CZ, the CEO of Binance, came out and stated that that was categorically untrue. Binance has no offices in Shanghai, thus could not have been raided, thus the story is completely false. He went on even further to deride the Block Crypto for their aggressive attacks and stating that their false reporting was the reason behind the market tanking and that they would be suing the Block for
arguing fake news.
Exactly, arguing fake news. The Block Crypto came back out with a response article doubling down on what they were saying, showing their work, as it were, highlighting the sources they'd used, the statements they'd made, and pictures showing that the raid had in fact occurred, that Binance does in fact hold offices in Shanghai. And this is the state of facts, as it were, as we know them right now. Since then, it's been a big Twitter back and forth. We've seen the likes of Justin Sun come out saying that he's establishing a fund to stop the spreaders of FUD in the sphere, and which sounds awfully like an anti-journalistic, anti-freedom of speech fund when you actually boil it down.
God bless you for saying that yourself, not me.
But again, the Block has stood by their reporting. Mike Dudas coming out repeatedly stating that their reporting is sound and they stand by it, and now there's threats of lawsuits going back and forth. Anyway, regardless, whether or not that has caused the market to tank, it is certainly a much discussed issue in the sphere now, how reporters go about discussing what they're talking about and the truth in reporting and where truth derives in the sphere that's so led and dominated by Twitter and what people choose to tweet out. This question is being cast into a big light, and particularly CZ's role in all this.
And at the end of the day, I think one thing it proves, and that's interesting before we look at has this really affected the price, and it might have, it's the people finally, I don't know if they forget, but the Twitter is not a court of law.
No.
It's an opinion-based vehicle of social media. At the end of the day, CZ very prolific on it, and as we know, claims transparency, whatnot. But we can argue that the Block, at the end of the day, whether it's an office or space, there is one.
Yes.
Okay, we've seen pictures of it.
I mean, yes. We personally haven't independently verified anyone's reporting at this stage.
But we're looking at the Block's pictures.
But yes, looking at their pictures, they seem to have pictures of an office that seems clearly to show the message that they're trying to convey. CZ directly contradicts that, and it comes to the point.
Now, this becomes a full battle on Twitter, do we think, and needless to say, parallel to price dropping. Do we really think that affected the price of Bitcoin?
Affected, perhaps. Is it the main catalyst for a massive price drop in the double digits? I don't know, Yael. That seems a little far-fetched to me. As important as Binance is in this sphere, one Twitter battle does not seem to be the big catalyst that can change everything, particularly in the wake of what else is going on in the sphere, which we're seeing indications of miner capitulation. That is, miners are no longer able to keep up with their payments and able to actually profit in the sphere, having to start to sell off some of their Bitcoin, which tends to be a vicious cycle at around these times, particularly approaching halvings. You get a lot of sales from these miners that bring down the market before a halving, before it tends to, in the past, jump back up, which again, is a lot of the analysis being put out by some of the big and established players at the moment. This is a dip to be buying for the purpose of boosting towards the halving. This is not financial advice for everyone out there, just a narrative that tends to run through the sphere. And we are seeing other elements of strength going on throughout the sphere, backed particularly the Bitcoin Futures Exchange, the physically settled Bitcoin Futures Exchange, hitting an all-time daily high of 2,728 contracts traded on the exchange in one day.
And it's a very good point, because parallel to the dip narrative, backed is showing actually, one can argue that backed is actually the flip side of that. Now let me ask you this also, isn't this dip also something that many within the sphere have warned of in the past several weeks?
Yes, certainly. This dip was foreseeable, this was coming, there were indicators that it needed to take that further dip down, and this is a consolidation period, and really this is all very positive for the market. Now, I'll leave that to analysts and traders to speculate on into the future, but regardless, to pin it down to any one particular act, I think is perhaps a naive view, a bit of a black and white view, I think, to understand the complexities of it all. But there is no doubt, talking about China as a whole, and again, I'm not talking about Binance and what specifics are happening there. China as a whole, they have shown a number of indications in the past of their abilities to move the market. We saw it in 2017, we saw it earlier this year in 2019, we've seen it again now. When China moves one way or the other, whether bullish or bearish on cryptocurrencies in a particular way, markets respond.
I tend to agree, but maybe it's only at the level of the Xi Jinping decrees rather than smaller players.
Exactly.
Definitely points to take into consideration. Asher Westrop Evans, senior Block TV correspondent. Thank you for that. And as Asher said, it's not so black and white. There's a lot of gray, just like in life. We are Block TV. We'll be right back.
For more news and updates, follow us on Twitter.